Hello and welcome to this special conversation. I have with me Prashant Jain, who's been appointed as the MD and CEO at JSW Energy pretty recently to get an understanding of what's really happening at the company. Let's talk to the man himself. Prashant, good to have you on the show. Thank you very much for your time. Well, JSW Energy, we all know, in fact, the power sector overall has been going through its own tough times. JSW Energy also has struggled, if I would can use that word, in terms of the growth and profitability, owing largely to the way the sector has been. But how are you looking to turn things around? Because that becomes your immediate priority, isn't it?
Yeah, that's true. We need to see in the context. Right now, power sector is in a bit macro point of view, bit in challenges. In last 4 or 5 years, a lot of capacity has been added up in the thermal space, whereas the demand has not grown up.
Sure.
Demand has not grown up because of the industrial growth, which has been not picking up. Second thing, the government has been taking a lot of drive that is particularly with respect to the energy efficiency.
Sure.
And because of that, there are the demand and supply mismatch which has happened. And on the merchant tariff side, the prices have crashed at this point of time. So the prices which were in the range of 4 rupees per unit right now has come down to 2 rupees 50 paisa per unit. In terms of JSW Energy, right now we are tied up for 64 or 65% of the total capacity is tied up for the long-term PPA, and balance 35-36% is still open. And there we are facing a lot of challenges. So our immediate priority is to tie up on the long-term basis for these untied capacity. We have we are operating in 2 spaces. One is thermal, second is hydro. In hydro, we are expecting that we will be tying up long-term PPAs. So from 64%, we will be going close to 74-75% PPA in long-term in this financial year. So that's one thing which we are expecting pretty much in this year. And on the balance 25% of the PPA, we do not have visibility at this point of time because state governments are not tying up PPAs.
Right.
Uday scheme has been really successful in a way which has improved the financial performance of the DISCOMs, but DISCOMs naturally are taking a lot of advantage of buying the peak load power at this point of time in the merchant market. So the exchange market, they are able to secure power on RTC basis at 2 rupees 65 paisa to 2 rupees 90 paisa kind of a range. So that's a big challenge for us. Sure. However, we will continue to look forward.
When you talk about the long-term PPAs, is what your priority is to tie up for that? And do you see any challenges there again because the demand is not coming through yet? And what are your sort of targets that you're looking at when you talk about? Can you elaborate a bit on your long-term PPAs that you're talking on?
So long-term PPAs will be signed in due course of time. If you see that in Niti Aayog as well as CEA, they are talking about 5 to 5.5% of the demand projection,
right,
which I am pretty confident is going to happen because, economic growth and IIP, which was not picking up, I think with a lot of Make in India initiative, those things are going to change. That's number one. Number two, the government focus on low-income housing. That's going to prop up the electrical demand. Sure. Third thing, there is a lot of focus on the electrical mobility. You can very well imagine that, electrical mobility, you are replacing the petroleum energy demand with electrical energy demand.
Sure.
All this is going to give a boost to the...
and JSW Group is going to participate in a big way as far as the electric mobility goes.
Yeah, so that's one part of it. Sure. But another part of it, from the demand perspective,
yes, there
is going to be a huge scope as far as this is going to happen.
Sure.
Now let's see how the capacities are going to be added up in next 5 years time frame. The government focus is from 57,000 megawatt of renewable energy, they want to go to 175,000 megawatt or 175 gigawatt.
Yeah.
Now, if you see in next 5 years, if you are going to add up another 120 gigawatt of the renewable energy, that's going to give you effectively 25 gigawatt only, where the demand is going to grow up by 65 gigawatt. Sure. So the balance power will be matched by the thermal space.
You think so? So there's still a big opportunity for thermal, is what you're saying?
Not in the capacity addition. but in terms of the PLF utilization. So what's going to happen is, right now, the central generators, they are operating close to 72% of the PLF, whereas the private generators are operating at 52% or 54% of PLF. So their PLF is going to go up. How? By tying up the long-term PPAs. Yet, I don't see that is happening immediately in a couple of months' time, but yes, in 2 years time frame, the things will start changing, or 1.5 year time frame.
Sure.
So there are some challenges still in front of us for next 18 months.
Of course. So challenges will be there, and you are geared up to sort of face them. But tell me, as far as JSW Energy is concerned, the kind of debt you have right now, if you can throw a picture there, and also help us understand if there will be fundraising that you'll require to sort of fund the expansion that you have sought. Also, this is a good opportunity in a time when you have a lot of stressed assets out there, this entire drive around NPA, and your group could look at potential assets. I mean, that's the trend that we've seen from JSW Group all the time. If yes, what are your possible companies that you could be looking at, areas and opportunities that you would want to sort of acquire and grow your business? So give us a sense on the debt, fundraising, and your consolidation plans.
Okay, so at this point of time, if you see as in March 2017, our total debt was 13,500 crores net debt, and our net worth is 10,500, 10,700 crores. So our net debt to equity is close to 1.29. So we have a pretty good balance sheet. Yeah. And we are a free cash flow company. So whatever money we are generating is going for either for the debt repayment or for the dividend at this point of time. So we are fully geared up to look at the various opportunity. We genuinely believe that there will be a consolidation in this space. However, the consolidation is contingent upon that what kind of a haircut the lending institutions are going to take, because equity is totally wiped out. The stranded capacity, which is in the tune of 25,000 to 30,000 megawatt, is with an investment of 8 crore to 10 crore per megawatt capacity. The prices which are new normal in this country is 2 rupees 50 paisa to 3 rupees. Mr. Piyush Goyal very well said that, prices of power will be below 3 rupees. I 100% agree with him, because, the solar power tariff is 2 rupees 45 paisa.
It's already sort of
and NTPC power tariff is on a centralized pool basis is 3 rupees 19 to 3 rupees 20 paisa. So the price will be in the range of 250 to 325. So if you say these are the prices, so I don't think the power plants with a 3 crore per megawatt to 3 crore 50 lakh rupees per megawatt will be the only viable option.
Okay.
So we need to see very clearly that, when the lenders are ready to take that kind of a haircut, I think there will be a lot of appetite for revival of stranded capacity at that point of time.
And you are well, equipped with funding for these projects that you're talking about?
Yes, we will be able to move very quickly and do some consolidation in case we get the right opportunity at right valuation.
Sure. There are quite a few plans, and especially in the power space, there are, as I know and we know, stressed assets. Any specific ones which are geographically making sense and are strategic for your growth opportunity? A couple of them that you would be already sort of looking at seriously?
So, to give you the background, I think geographically it will be a pithead plant, because there are the two things which is most important for acquisition. One is PPA, which none of them have. Second is the coal, which none of them have at this point of time. So, but if the plant is at pithead, at least you can really aspire for that eventually either in the coal linkage auction or coal mine auction. Whenever it is done, you will be best placed to do that. So it will be in the geography where the coal belt is. You can say Chhattisgarh, you can say Jharkhand, you can say Odisha, I think, or Madhya Pradesh. These are the best placed locations.
So will you be bidding for all the projects which are power projects which will come up for auctions and stuff from the NCLT?
No, we will look at the merit base. So our first preference will be the projects where, which are very close to, in this geography, very close to the certain mines where Coal India is operating, and then they have surplus coal. There will be the projects which is already commissioned or near completion. So that's the certain.
What is the target that you're working with over the next, let's say, 2 years of capacity generation, and both in thermal and perhaps renewables? I don't know if your plans are to go that space, and I'll ask you that as well. But largely, the total capacity addition for JSW Energy over the next few years, what is the target number that you're working with? How much will come from organic growth and how much will be contributed from inorganic means?
So my target will be on the return on equity side and a strong balance sheet side. So I won't be giving target on in terms of the capacity which we will be adding up. So last year our return on equity was little north of 6% on a consolidated basis. We would like to improve it to the double digit, and that's our main focus. So we will be looking any acquisition precisely on the return on equity principle, that what we generate and create the value for the stakeholders.
Are you hopeful of getting a double digit return by the end of this financial year?
So I have to work for that.
Yeah. So, but you are, that's the target that you've set out.
That's a target we have set for a long-term perspective, that, you know, we have to long-term to medium-term, we have to work towards to achieve
sure.
That
and inorganic will play a critical role in the sense that you will be looking at projects which will give you a good
Absolutely.
return on equity. All right. Renewables, that's another space where obviously the government pushes a lot, but viability is always a questionable mark. I mean, when you talk of solar power, for example, it's rock bottom prices. People are sort of not sure whether this is a model which will sustain. Are you looking to get into that space? All the big, or at least some of the big corporates are, you know, sort of vying for it and have already gotten into that space. Will JSW Energy get into renewables?
So I think renewable is the future. So it's going to be here. And both the thermal as well as the renewable, they will coexist until and unless there is a storage is viable at a very low price, which I don't think is going to happen in 6 years time or 8 years time. But yes, probably 8 to 10 years time it may be economically viable to have switched completely to renewable at that point of time. But renewable is the future, and we are seriously evaluating that opportunity. And as a matter of fact, we are also working on asset light approach at this point of time, because, you know, as a group, we have been always working on a, asset concentrated, balance sheets.
Yeah.
But the time is to work on the asset light, and then we are seriously evaluating. I personally feel they are the grid management opportunities in time to come, because, you know, on one side there will be a lot of power which will be generated only for 5 hours. So, for example, if you look at 175 gigawatts of the renewable power which is coming for 5 hours, and at that point of time how the grid load has to be managed. So that's a very big opportunity. There is a opportunity of 40 gigawatt of capacity which is planned for the rooftop solar. So which is directly a B2C business. So that's a very big opportunity. So that needs to be seen. The energy storage is another opportunity.
And that, of course, the government is talking about.
That's government is talking about, and we are seriously thinking about those kind of opportunities. So in time to come, you will be hearing from us.
But this will be a very capital intensive business, and how will you look at funds for those?
No, I don't think so. It will be very, very capital intensive, because this could be a very good model where it could be you can work on EMI model, which will be on the balance sheet of the consumers.
Okay.
And so like you buy a car today.
Really? Okay.
So similarly, these kind of principles could be adopted.
Oh, is the government thinking on those lines already?
So, but there is a business opportunity I genuinely believe about.
When do you think you would want to enter in this? Because the sooner the better, because as you said, the future is renewables, and these are places that you spoke on are going to sort of give you good returns. So what are you waiting for when I ask you why not now and later?
So we are seriously working on that. So very soon you will hear from us. So we will be very soon launching something on this space.
Is there an opportunity of acquisition in this space?
I don't think so at this point of time, but some of the startups could be acquisition targets.
Sure. So that's the area you're working on. Fair enough. I would want to talk specifically on the deal between JSW Energy and JSPL, which has now been delayed. There were some issues on corporate governance that were cited at least. Give us a sense on what is happening on that deal. Is it on, off, or what's the future?
So as far as the deal between JSW and JSPL is concerned, it was signed. The long stop date is 1 year away, which is June 2018.
It's been pushed.
No, it has not been pushed. It's at the same date with which we have been working, June 2018. I don't think there is any corporate governance issue because the minority shareholders from both the group, both the companies have already approved the transaction. The transaction is subjected to certain condition precedents. I think both the companies are committed to complete the transaction, and necessary approvals are being taken up. So we look forward that this transaction happens.
Sure. Any other such deals that you are looking at signing with other power companies?
No, another deal which we had already signed was the Bina with the Jayaprakash Group. There also the deal was signed, but the lender's approval is important, and we believe there is a certain reservation from the lenders to Jayaprakash Group at this point of time. But both the companies are committed towards it, and I believe that something will be worked out.
But if this deal doesn't go through, what happens?
No, if deal doesn't go through, then whatever loan we have given to Jayaprakash, that will be serviced by Jayaprakash Group, and then it will be returned to us.
So any timelines that you have in mind to hear back from them on closure of this deal either ways?
So the deal long stop date was pushed to 31st December 2017. So we are working towards that, and we will be taking some decision by December this year.
All right, so that's where it stands. Talking about the thermal power push, as you were talking, or the hydel power push, not much has been the focus of the government. You did say that while in capacity addition things will not happen, but it will still have to coexist till the time renewable energy catches up. What is the time frame that one is talking about, and can we see JSW eventually converting itself from a thermal power company to a renewable power company in a long-term basis?
I think so.
That is the intent?
I think so. I think so because the habits will absolutely change. See, today people are really concerned about the electrical mobility, how the charging infrastructure will come. Today, you carry your mobile phone and you need to charge your mobile phone 4 to 5 times a day. You don't bother about it. You have created your life an ecosystem around it, that in your car you charge it, in your office, at home, wherever you are, or while you are taking my interview, you may be charging your phone. So the habits of the consumer are going to change. So it's the disruption which has happened to us. And I think renewables is the way of life, electrical mobility is way of life, and it offers a huge opportunity for the utility companies like us, which will be, so I see personally that our percentage of portfolio in the thermal space will be squeezed, and it will be ramped up in the renewable.
Sure. Electric mobility, and I want to specifically talk about that. We know that the group has announced that they intend to get into that space, even to the extent that perhaps you will launch cars which are electric at some point, maybe look at some companies in Europe or wherever to acquire and sort of get into that business. Give us a sense of what is the roadmap, what is the thinking in the group in that space, because it's not just about producing electric energy, but I think going beyond it, isn't it?
Yeah, that's true. So I think again that's the new normal which is going to be in space of the mobility, and that's where the JSW Group see an opportunity to enter into the a B2C kind of a business. All our businesses have been around B2B, and we have been really looking forward for some businesses. Paints is one business which we are working at this point of time, which we will be launching very soon. So mobility is another business the group have been working. So a lot is being done. So very soon I think you will be hearing from Mr. Jindal, and probably he'll be announcing in time to come to in mobility space some sort of a launch plan.
Sure. This will be a big part of the overall business going forward. I mean, just to give us a sense, you're an energy company at this point in time, and a steel, of course. So very much in the infrastructure space. the extension of this in the electric mobility will sort of be a part of infra in that sense. But give us a roadmap on, let's say by 2020, how is the group structured to say this much of your business will come from, let's say, steel, this one from energy, and perhaps electric vehicles?
So that way we have not planned anything that, how much will be from each space, because each vertical is being managed with their own aspiration by separate leadership. So each business has its own challenges as well as the opportunity. So as far as the mobility is concerned, it's a separate vertical which will be, evolving in time to come. But I feel what, Mr. Gadkari is talking about, or Mr. Piyush Goyal is talking about, or this current government is talking about, that by 2030, there will be only electric vehicle. I think it will be much earlier than that.
Much earlier
than that. Primarily because of the economic rationale. What happened in terms of the solar prices, nobody anticipated this kind of a prices. The same is going to happen with in terms of the battery prices. And when the battery prices are going down, then imagine a situation that for an electric car to operate. Today I drove an electric car in Bombay when I came to office. It's a Nissan Leaf which we had imported. And so the cost of car to run the car is only 70 paisa per kilometer, and then 10 paisa is another maintenance, as compared to a IC engine car on a petrol, which will be 6 to 7 rupees per kilometer. Imagine a kind of a situation when the capital cost of a car is equal to a IC engine car. Would you like to buy a IC engine car?
No.
I don't think so. So people are having little anxiety in terms of the range, in terms of the charging infrastructure. I think all this is going to change. Everything around.
But who will bear the cost? Because as we know that electric products or cars, the reason why it hasn't worked out anywhere in the world in a big way is because of the cost issues. How do you address the cost? As you said, the battery costs and the charging costs are really high. So who bears this cost?
4 years ago, government was pushing renewable for solar, and they were giving economic viability funding. Today, are they giving?
No.
You have answered yourself. So when you go to China and Europe, you will realize that the giga factories which are under construction for battery, it's mind-boggling. So by 2020, I believe the battery prices which are in the range of $250 to $300 per kilowatt hour, along with the battery management system, they will be south of $100.
That is a kind of slash we could see.
That's a kind of slash.
So do you still, margins, etc., how do you work around that? And is it a sustainable business model?
No, when the prices come down, then everything work around. So people will very
Economies
quickly,
of scale.
economy of scale, people will very quickly switch, and that's what happened. And there is a lot of investment which is being done in terms of R&D everywhere in the world. So people are talking about all these things, and that's what made the solar panel prices to go down, and that's what will happen to the battery prices.
Sure.
And that will change the ecosystem around us. You can imagine that there will be no value to oil, no value to coal. So people will talk everything about electric, and people will talk about only renewable. And probably 10 to 12 years down the line, it will be only the renewable power.
And that's the reason why your group is looking at switching it entirely on that. Quickly on the government's effort so far, and you did speak a bit about the Uday scheme and the others, but largely, has it walked the talk? Have they addressed all the issues pertaining to the power sector? Because there are quite a plenty still. I mean, a lot of states are still struggling as far as the power woes continue. While there are a lot of meetings that happen with the industry and the government, how much of it actually has translated into results and solutions on ground is what I'm trying to understand. Also on GST, any challenges that you've seen with the implementation of that, and how has it affected your business?
So first I will take up the GST part. As far as GST is concerned, it's good for the domestic coal. consumers, and effectively, so there is a 6% or 7% advantage for the domestic coal consumers. So effectively, that has been passed to the end consumer, so the power prices will come down.
Sure.
But for imported coal basis, it has become more expensive by 3%, which is not passed through, because it will be in the whatever is in the imported coal-based PPAs, it will be passed through. But otherwise, for the merchant power producers like us, it's a negative impact.
Sure.
And in terms of the policy side, I think we need to see it in two silos, two buckets. One is central government side. So as far as the central government side, whatever they could do, they have been doing.
Sure.
And they have done a lot of changes. But there are the two separate issues in terms of the distribution and transmission losses, as well as the health of the distribution companies. And third part is the political will in terms of the farm loan waiver. You know, now we are setting little wrong precedent, or maybe some of the state governments who are doing the farm loan waiver, that is a negative dent, or you can say that, you know, we are not in the right direction. I am little skeptical on that side. But we need to do a little more on the improvement on the health of the distribution company at this point of time before they can undertake more PPAs. Because in electrification side, a lot is being done, but because of the farmers are being given power at lower prices, the recovery is not there, and because of that, the power cut is also there at those locations.
Sure.
So that's a you know, it's not balanced at this point of time. But
sure.
I think a lot needs to be done by the state governments on that front.
Yeah, state governments have to really sort of gear up. Quickly, last question, Prashant. JSW Energy in the international arena, what are your aspirations as far as global opportunities go? Also, FDI has been allowed as far as 100% in the power space investment. Do you think that will bring in more consolidation in the space?
I think India offers a lot of opportunity at this point of time. So we are working only in the concentrating on India at this point of time, and we don't think overseas there are enough opportunities.
Sure.
Second thing is the disruption what is happening in India is happening overseas also. So the most of the companies, utility companies, they are either in thermal space, and or both by coal as well as the gas, and then there is a disruption taking place overseas in terms of the renewable. So I think India is a lot to catch up, because if you see today, our per capita power consumption is close to 1,000 kilowatt hour per person, and global average is 2,800.
Sure.
So we are way behind.
Nowhere.
So it offers a lot of opportunities for the companies like us, and we would like to concentrate on India.
All right, concentrating on India. Thanks, Prashant. Good speaking with you. All the best.
Thank you very much. Thank you. Thanks for having me.